Hello, good morning, good afternoon, good evening. My name is Junwoo Lim, and in today's presentation, I will provide a detailed financial analysis of Samsung Electronics, a major global corporation headquartered in South Korea. While most of us recognize Samsung for its consumer electronics, today we look behind the products to examine its financial health, specifically how its financial indicators reflect its strategic response to the semiconductor cycle and the rapidly shifting AI market. My goal is to show that these reported figures are not just isolated numbers, but a direct result of the company's broader management decisions. First, let's address what has allowed Samsung to remain financially successful in a volatile market. The year 2023 was particularly difficult for the tech industry, marked by a sharp contraction in memory prices. According to Samsung Electronics' consolidated financial statements, operating margins fell to approximately 2.5% during this period, a point at which many competitors drastically cut production and capital expenditure. However, Samsung maintained its R&D investment, focusing specifically on high bandwidth memory and next generation DRAM. This decision to prioritize long-term technological readiness over short-term profit protection proved to be the key driver of the earnings recovery we see in 2025, demonstrating that Samsung's success is built on strategic resource allocation rather than reactive cost cutting. What broader lessons can we draw from this? The key takeaway is that companies with strong balance sheets can use downturns as a strategic opportunity, a chance to outinvest competitors and emerge stronger when the cycle turns. This is reflected in Samsung's financial highlights. According to Samsung Electronics' 2025 earnings release, total revenue reached approximately 247 billion US dollar, a 10.9% increase year over year. Operating profit recovered strongly and annual R&D spending held steady at approximately 29.6 billion US dollars even throughout the downturn, showing that Samsung used the difficult period to invest its way into a stronger market position. Now let's examine the three main financial statements. The income statement records revenues, expenses, and profits over a period, telling us whether the company is making money. As reported in 2025 earnings release, quarterly revenue recently exceeded approximately 68.9 billion US dollar, confirming a clear V-shaped recovery. The balance sheet provides a snapshot of what the company owns and owes at a point in time. Drawing from Samsung's consolidated financial statements, total assets exceed approximately 333 billion US dollar, providing a foundation for its long-term investments. The cash flow statement tracks actual cash movement in and out of business. Samsung funds its 29.6 billion US dollar annual R&D primarily through operating cash flow without relying on external debt, a rare competitive advantage in the capital-intensive semiconductor industry. Now let's look at Samsung's key financial ratios and stock market data. On liquidity, according to Business Insider Markets, Samsung's current ratio is 2.79, meaning nearly $3 in current assets for every dollar of short-term obligations. For solvency, the debt-to-equity ratio stands at just 0.06, placing Samsung among the most financially conservative companies in global tech, with a bankruptcy probability of less than 1%. On profitability, margins have been normalizing back toward double digits as of 2025, driven by premium AI-related memory pricing. Turning to the stock market, according to Morningstar, Samsung carries a market capitalization of approximately 850 billion US dollar, a trailing P/E of 27.18, and a forward dividend yield of 1.26%. According to investing.com, analyst consensus is a strong buy with a 12-month average price target suggesting meaningful upside from current levels. My invest recommendation is a clear invest. A legitimate near-term concern is Samsung's current lag in advanced HBM supply relative to competitors such as SK Hynix, a risk worth acknowledging. However, Samsung's furniture manufacturing scale, conservative financial structure, and deep R&D pipeline make this a temporary setback rather than a structural weakness. Furthermore, research by Chang and Lee in 2022 and Kim in 2018 has shown that strong ESG performance is positively associated with long-term firm value, an area where Samsung has made measurable commitments. As a foundational supplier for global AI infrastructure with a consistent shareholder return policy, Samsung represents a compelling opportunity for patient, long-term investors. In conclusion, Samsung Electronics presents a resilient financial profile, managing risk through conservative debt levels and strong liquidity, while driving growth through sustained R&D investments. Its financial statements confirmed a V-shaped recovery, its ratios reveal a Fortress-like balance sheet, and its market data suggests meaningful upside potentials. Samsung stands as a compelling case study in how disciplined financial management and strategic foresight can position a company for enduring success. These are the reference, and thank you so much for your attention, and please let me know if you have any questions.